Welcome back. Let's get into that market picture now very quickly, as Asian stocks were mixed in trade today as investors grew wary of as they waited for more details about last week's agreement for a perpetual trade deal between the US and China. Doubts have emerged yesterday amid reports that Chinese officials wanted more talks before signing the so-called Phase 1 deal. US tariff hikes on about $160 billion in Chinese goods scheduled to take effect in December are apparently still on track, although tariff hikes on $250 billion of Chinese goods that were to take effect this week were, however, postponed. Japan's Nikkei did manage to surge 1.9% as traders did return from holiday, so that sits at 22,207 points then at the close of trade. Hong Kong's Hang Seng was slightly weaker, though. That went down 0.1%, 26,498 points, while the Shanghai Composite lost 0.6%, ending the day below 3,000 at 2,991 points. Let's head on over to the United States now, where Wall Street edged lower last night as uncertainties following recent US-China trade negotiations clouded sentiment, and investors turned their focus onto the third quarter earnings season, which begins in earnest today. All three major US stock averages closed in the red, snapping what has been a three-day winning streak during which the benchmark S&P 500 gained 2.7%. The Dow Jones Industrial 0.11% to 26,787 points. The S&P 500 0.14% down 2,966, and the Nasdaq Composite 0.1% down 8,048 points. Let's move that picture over now to Europe as well, which has certainly not enjoyed the best of times of late, and it's a bit of a mixed picture this afternoon, though, with the FTSE 100 out in London perhaps struggling at present, while the DAX and CAC 40 out in Germany and France respectively are seeing some positive numbers. On the local exchange, well, yesterday was perhaps a much better day and a slightly better one considering how things have fared of late, and now we're seeing the market head a little bit higher as well, above that 55,000 point mark, 55,261. Industrials and financials doing fairly well. We've seen the rand recover as well, right? So that's played into the hands of some of those financial counters. Taking a look at the resource shares, well, they seem to be headed a whole lot higher as well. Then resources doing their bit by climbing to 44,251 points there. Gold shares also in better territory. Onto the market themselves, well, the commodities, well, it seems that gold not so much of a safe haven anymore, and investors perhaps not looking towards it as much as they did before. But for now, still petering a little higher at 1,497 points, not at that key 1,500 point mark. 2,445 then for platinum, and $50.93 a barrel for Brent crude. We'll get you an update on those figures as well. Onto the currency picture, 14.83 for a US dollar. Some weakness coming through, having seen that currency head off to around 14.70 odd against the US dollar as well. 18.78 then for a British pound, 16.33 for a euro. Now, Martin Harris from IG South Africa joins us live from the Johannesburg Stock Exchange as we get to unpack that market picture a whole lot more. Martin, thank you so much for the time. We just spoke a little bit about that Brent crude price, now $59 odd against the US dollar. Some key things there has been that it just keeps on sort of just petering below that $60 a barrel mark. Will it be supply? Will it be demand? What exactly is going on there?
Hi there, Arabile. Look, I mean, today what we're seeing is that weak Chinese data coming out over the weekend has basically suggested that the demand is really going to decrease going forward from the world's second largest economy. And because of that slowdown is where they're seeing less demand for oil. And so that's where the sentiment that's driving oil at the moment.
Yeah, so I suppose the question then becomes the sustainability of the price then below this mark. Even gold headed below the 1,500 mark. A lot of that would be perhaps based more on the fact that, you know, no longer safe haven, perhaps just for now. Risk on trading is back in play.
Absolutely. I think the risk on sentiment that you spoke about, that's really what's been driving gold at the moment. So gold's peeling back again, slightly weaker. So it's kind of oscillating a little bit underneath 1,500. But that's what, as we said, that risk on sentiment as the Chinese-US trade talks have stabilized and they're looking to negotiate on a few sectors. We see investors and traders and participants re-engaging in equity markets, and so they take their money out of cash, out of commodities, out of things, especially safe havens like gold, and put it back into the equity markets.
Yeah. All right. Well, let's talk about the South African currency very quickly as well then. 1483 against the US dollar. We had actually strengthened quite a bit on the back of the trade deal with the phase one of the trade deal, shall we get that corrected, between China and the United States. But not much detail, so the markets seem to perhaps be a little bit wary of that discussion.
Look, I mean, these trade talks, coming backwards and forwards, the sentiment is changing on a daily basis. And so we, at this moment, unless there's some serious news, it's not really pushing markets. So, but everyone is attuned to what Donald Trump is saying. Everyone is aware of where things are going, and we're looking carefully at what is being said. At this point, fundamentals and technicals have kind of gone out of the window, and we've got a news-driven market. And so everyone is paying careful attention to what is being said regarding those trade talks.
Yeah. Do we see perhaps a phase two, a phase three? I mean, just yesterday we got word that this Trump and Chinese-US trade war situation and thrashing out the details of this deal may take quite a long time in order to actually get right. Do you see us perhaps getting to a point where we can actually have some sort of proper discussion around it?
Absolutely. I think what's going to happen is that the Chinese delegates are going to look to extend this for as long as possible, really draw it out. They've got the political will. Their people are very compliant to politics in China, whereas Trump is looking to really get this done quite quickly. He's got an election coming up that he needs to face, and with the US economy in a strong position and fairly weak opposition from the Democrats, he could be certain of a victory there. So yeah, he's really pushing for some good deals to be done on the table where USA and Donald Trump come out looking good in the short term, and China are going to look to try and delay negotiations, and so we'll probably see a few phases to this deal.
Yeah, so I suppose that becomes an interesting element. Some equity news as well on the front of the United States. While third quarter numbers expected to come out, that should perhaps set the tone as well for the third quarter and just how things are expected to be. Some analysts perhaps expecting things to be down by 3.2%. That would make it the worst quarter since 2016, if I'm not mistaken. Will it be that bad?
Potentially it could be, but bad news is good news. If we start to see those equity markets peel off, combined with the weak sort of economic data coming out of the United States. So when we say weak, it's just underdoing what expectations are. They've at their best employment rates for decades. What we could see is that the Federal Reserve Bank steps in and cuts rates, and so we see more money flow into equities, and so that's really positive for the United States. So the thing is, if these results aren't too bad, we could actually see a push higher on the equity markets. If they are very bad, that's where we see the Fed step in, so it becomes good again.
Yeah, I suppose then we'll hopefully get more out of that in the fight between Donald Trump and, of course, the Fed will be of keen interest. Will the sanctions on Turkey hurt in any way? Will those perhaps play their way into the market at some stage?
I think the sanctions on Turkey are really just a political game at this point. So what Donald Trump is doing is they're putting sanctions on Turkish individuals, and they're also putting taxes. They're increasing their tariffs on US imports of Turkish steel. So any US consumer importing Turkish steel is getting slapped with some large tariffs, basically so that people stop buying anything from Turkey, and this is due to their involvement in northern Syria, attacking the previous allies of the United States, the Kurds in that region, while they were sort of defending the region against ISIS. What's happening though is that Donald Trump is getting a lot of backlash from not just the Democrats, but from people within his own Republican Party for how the US withdrew from northern Syria without protecting their allies, and now that Turkey is stepping in to attack their former allies. So that's what's happening there, and so it will be a political gamble for Donald Trump, and he needs the US government to come out strong, and he needs his name to look good at the end of this. So he will squeeze Turkey quite hard.
Yeah, I can believe that to certainly be the case. We'll see how things fare on that front. Martin, always great having you on the show. Appreciate your time. But Martin Harris from IG South Africa joining us live from the Johannesburg Stock Exchange there, giving us the lowdown on that market picture.